VT's higher returns look great until you see it crash twice as hard as IXUS during downturns. VT's extra 20 points came with double the worst year pain, minus 33% versus 16% for IXUS. International stocks crushed it this year. IXUS jumped 32%, while the global blend only managed 23%. VT's been racing longer and built up more total gains, while IXUS started later but recently picked up serious speed on the track. VT's higher Sharpe ratio means you're getting better returns for the same amount of risk you're taking. VT's Sortino ratio of 0.7 beats IXUS at 0.6, showing better returns for the downside risk investors actually faced. Think mechanical leverage. VT's generating more return per unit of risk taken. It's lifting heavier weight with less effort, which is exactly what you want. IXUS crashed 4 points harder than VT. That's real money vanishing when markets turned ugly on international stocks. IXUS stayed underwater nearly 100 days longer. That's over 3 extra months of watching your money struggle to recover. IXUS's 30-foot dive lasted over a year and a half, while VT's 26-foot pool gave you slightly less pain to endure. IXUS pays you nearly double what VT does. That's real cash flow every year, not just paper gains. IXUS pays you an extra 1.3% dividend yield while you wait. That's real cash cushioning volatility and funding reinvestment. IXUS is like a couch that drops more coins. Higher dividend yield means more cash in your pocket while you're waiting for growth. VT's perfect 1.0 correlation means it moves exactly with US markets, while IXUS offers some independence at 0.8. That 0.8 correlation means IXUS won't perfectly mirror US crashes, giving you actual diversification when you need it most. VT mirrors the S&P 500's every move. They're perfect dance partners. IXUS, it occasionally breaks formation, moving to its own beat entirely. VT's 26% tech allocation versus IXUS's 16% explains why it's delivered higher returns and bigger swings. VT wins the long game with 70% over 5 years, but IXUS is catching up fast, delivering 32% returns and double the dividend income lately. VT's 26% tech allocation captured that explosive sector growth, while IXUS spreads risk more evenly across industries. VT's loading up on tech, the sector that's been winning big, while IXUS plays it safer by spreading more evenly across all sectors. IXUS trades cheaper at 15 times earnings compared to VT's 18.7. That's real valuation savings here. At a PE of 15, IXUS offers value. Cheaper stocks often outperform when market sentiment finally shifts. Think of PE ratios like report card prices. IXUS charges $15 per A grade, while VT charges $19 for that same quality performance. VT edges out IXUS on fees, 0.06 versus 0.07%. That's basically $1 saved yearly per 10,000. That 0.01% fee difference? It's pocket change when IXUS's extra 1.3% dividend outweighs it by 130 times. VT saves you a penny in fees, but IXUS delivers 130 pennies more in dividends. Classic couch change moment. Don't trip over nickels chasing pennies. So which fund fits you? VT if you're chasing growth globally, IXUS if you want international income diversification. VT's your all-in-one global ticket, racing through US markets. IXUS, that's the international-only scenic route, delivering higher dividends along the way. All the legal stuff, This isn't financial advice, just educational content for you. Want more breakdowns like this? Hit subscribe for weekly deep dives backed by real data on popular funds.